What's up, Investor Nation? Capital Markets boys are back here in November. We do have a special guest we'll be introducing here halfway through the program, Sean Pincus from Grit. But without further ado, we're going to jump into our traditional format, starting off with a little macroeconomics. And we will start with, if I get my clicker to work today, with interest rates. JD.
Yeah, want to keep it short and to the point because I think we've got a really good one today. You guys are going to get to meet Sean. It's going to be really interesting background and learning experience to talk about. So, but on the rate side, we got the 25 basis point cut in September, an additional 25 basis point cut in October. And, as we've said in the past, just because the Fed cuts doesn't mean rates will fall. And so that's what we've seen. We've seen a lot of chopping around. Overall 10-year staying pretty stable around the 4 to 4.1 mark. We did have, it's been a bit of an interesting couple months with the government shutdown. No data, so that's kind of been spooking markets. We saw the NASDAQ have a pretty big sell-off. There were some well-known pundits in the space talking about AI bubble. But we got NVIDIA's earnings yesterday. They really smashed, and so we saw stocks rally off that news this morning, and then finally we got some data. We finally got our September jobs report. So if you want to go to the next slide, right, we got non-farm payrolls numbers. They smashed expectations. So the economy added 120,000 jobs, which was beating the consensus analyst forecast of 50,000, but the overall unemployment rate for the month of September ticked up to 4.4% versus the 4.3% reported in August. A lot of that is college graduates entering the workforce, not being able to land jobs. So a bit of a mixed sort of labor status report. But the positive news coming out of it is prior to the labor report, market was only pricing in a 30% chance that the Fed would cut in December. And on the back of this labor report, market's now increasing the likelihood that the Fed may cut. So now that's sitting at 40%. So it's still, pretty mixed. We got inflation data coming out next week, so that'll hopefully give us some more certainty about what the Fed's going to do in December. But that's the macro update I got. Brian, you want to add anything?
No, I think we sat here on the last on the last one of these, and I think I probably said it that December was going to be a cut. It came out with a lot of certainty.
Yeah.
Now it feels like there's a lot of messaging coming out that December is going to be a push. I know the market's got it priced in between 40 and 50% likelihood of a cut, but I could tell you that it feels like they're messaging out to the market because of the strong payrolls and elevated inflation levels that they're probably going to push it. And we haven't seen, Jack mentioned NVIDIA's earnings. They came out with some of their guidance saying that the fourth quarter is going to be hot, is going to be strong for them. So their stock's ripping today. The whole market's kind of ripping pretty well as that story narrative continues to do pretty well if you're long it.
Tie us to the bow. What's that mean for our investors, both RTL and DSCR? What should be thinking? What are they thinking heading into?
Yeah, I'd leave it. Yeah, I'd leave it that you're at a near term probably floor in rates. That you're probably at a bottom till we get past December. December's always an interesting month for the capital markets. We talk about it all the time. Is a lot of the money that comes down from whether it's Wall Street, institutional capital, securitizations, people like to get their deals done prior to November. And so you're not going to see a lot of activity in December. You're not going to see a lot. No one wants to go buy or enter into a lot of trades. The markets tend to not shut down, but as far as new capital, new deals, it's a tough month to get something done. And so that's where another area that I'd see that you're probably putting in a floor right now for the next couple months.
Love it. All right, guys, let's kick it off. Sean here is a guest. Sean's been a long-term advocate of I Fund Cities and a dear friend of mine, a bit of a mentor in the construction space. So it's been fun to be around Sean the last, I guess, 7 years. And so, with further ado, Sean, maybe give them a little background on yourself and Grit, and then we can kind of jump into the questions.
Yeah, right on. You guys can hear me?
Yes.
Cool, right on. So, thanks for the intro, Ryan. I appreciate it. I'm Sean from Grit Construction. Up north, I have a company that's called Grit Construction. Down south, which we'll talk about soon, I have a company called Grit Coastal. Grit Construction is and was between a $30 and $50 million construction company building an industrial, mixed use, multifamily, single family, just about every asset class there is and was. We've made a strategic change in the last 18 months to shift down to Delaware and build out our platform under Grit Coastal. And it's building basically bay and beachfront homes. My background is a lot in finance and construction. What I'm super passionate about is building high quality homes and focusing on the materiality that we're using in these homes. And also up north, good, fast, and cheap. I'd say we always focused on being the best, so good. And we were relatively cheap. So I say we weren't always the fastest at building these projects, but we've carried some different mantras south with us that are a little bit different. So,
Sean, how did you go? We were looking at your background. We've known you for a long period of time. How did you go from Vanguard, one of the top money managers in the U.S., I guess top, them in BlackRock? How did you go from there to construction?
Pretty easy, actually, right? So when I was at Vanguard, I worked with all the ultra high net worth investors. So anybody that had 5 million plus. And Vanguard doesn't really meet with a lot of their clients. But in my role, I was able to. I worked with some of the sales executives. We travel out and meet these people. And what I learned early on was you're either someone that owns these people who are all really wealthy. They either own their own business, right? They inherited money from the family, or they were in real estate, right? Well, I knew that I wasn't inheriting money. I'll tell you that. So I knew I could build a business, and I knew I wanted to be in real estate. I always had a keen interest in it, always loved it. And when talking with these people, it drove me into that. And I think the first move I made was to go work for a real estate developer, using my financial background. But I always just loved construction. All throughout high school, I had a woodshop teacher that brought me along, taught me everything about construction. So yeah, it was an easy move for me, but I realized, I wanted to make money. That was my goal early on. And all these wealthy people have the same things in common: real estate, build a business, inherit it. And I could do 2 of the 3. So.
Love that. So before we go off your background, Ryan Holmes, what did you take away from your time at MVR that you applied to Grit Construction when you were building it in Philadelphia?
NVR, Ryan Holmes, they get somewhat of a bad rap sometimes, but they're building 14,000 houses a year or 1,400 houses, whatever it is, and they have such a large pool that anything that's talked about them online really is it has a big wave. There's a lot of other builders that I think aren't doing a great job either, but it's such a smaller scale, so they're not impacted. But either way, Ryan Holmes, I think, does a really good job at building homes, and they have great processes. Things I took from them when I left was, they pay their subs extremely quick so they can control the cost structure of everything. That's like the number one thing I took when I left them. And they have really good phase specs. That's the way in which they build and the way they hold their subs accountable. So they have like a whole cost sheet, and a whole way they outline how they want things done, their standards. I took a lot of that, and that's evolved over time. And we attach that to everybody's contract when we build. Again, kind of took some of that from Ryan, but it's certainly evolved. But the pay thing is the most important part. If you pay people quick, they'll do what you want, when you want, how you want.
Love that. Love that. All right. Well, so moving on, I know your personal background and why you moved up, from kind of Philadelphia down to Delaware. But I think from a business perspective, you moved to Grit. You were like 2nd or 3rd largest permit pooler in Philadelphia, building a ton of multifamily for a lot of Tier A developers, and then moved your business to Coastal Construction. And I guess from a bigger picture, we back up, I Fund Cities has seen that move from a lot of the regional developers. So Sean, maybe talk a little bit about the opportunity you saw at the coast versus, infill Philadelphia.
Yeah, I mean, right on. So I wouldn't say it was necessarily a pivot. I'd say the company was really evolving, right? What we saw so I've been coming down here for the last 12 years, right? That's the first personal part of it, right? And I'll stick to them from business. But the first personal part is I've been visiting Delaware for the last 12 years since I met my wife. She lived in Rehoboth, or her family lived close enough. And I saw just farmland from 15 minutes away from the beach all the way up to about 5 minutes away from the beach. It made no sense, right? And then you saw the big key players coming down here, like you saw NV, Insight, Shell Brothers, all these guys building in Delaware along the coast and the bayfront, beachfronts, but more inland. And I just thought it's coming, right? I just felt the wave coming over the past 12 years. But as far as a pivot or I would say it's not a pivot. It's an involvement. So I was looking at our business structure. Margins are getting tightened. They're getting cut. Contract types are tough. A lot of it's lump sum, stipulated, fee. And, development was drying up a little bit in Philly during COVID. COVID was kind of the turning point for us. I was spending a lot more time down at the beach. And what I realized was these these production home builders like NV, Shell, they're putting up these huge developments. People are shifting from urban living down to the coast because you can work remotely, you can work anywhere. And who doesn't want to work at their beach house? I was doing the same thing. We were getting higher margins on the deals when I was looking at them. We're making 10, 12% up north if we're lucky. And down here, 15 to 20%, sometimes 25%. So easy shift in mindset. You go make more money, but that's not why we did it. And that's more on the personal side. But it doesn't hurt that the margins are higher. The contract types are totally different. We're not doing lump sum. We're doing all cost plus. So the risk is transferring from Grit Construction to homeowner or end user. And I mean, as we start meeting people down here, the backlog of building for custom homes was 2 years. I mean, we were talking to people that are like, I can't get on someone's list for another 2 years. I'm like, wow, look at this gap, that we could fill easily. I love building. I love high performance homes. I love everything about custom, the bay, the beach. I love the area. This is such an opportunity for us. And that's why we made the shift.
Love it.
Sean, as you made the move, what were some sort of, I guess, lessons learned from the multifamily work in Philadelphia that you were able to use and leverage as a bit of a competitive advantage in the custom home, beachfront home in Delaware?
Yeah, so I'd say that's kind of our niche down here. One is performance home building, but that's not the answer to the multifamily. On the multifamily perspective, what we were able to do commercially in Philadelphia is, people are expecting us to gather lien waivers, right? Mechanics lien waivers. They're expecting us to submit AIA draws to the banks, deal with the bank inspectors, deal with the different banks, help finance some of these deals by making connections, to you guys and others. And that's not something that people are doing down here. Residential builders really aren't doing that, and they're not really offering that in their suite of services. So when we came down here, we're talking to some people that mom and pop or mom or dad got burned by a contractor at some point, and they're like, hey, we don't feel comfortable giving a deposit, or we didn't know this mechanics lien was set on their house, and they owed another $200,000, and I'm going guys, I got this solved. We handle all of that. We're set up commercially to do that. So it's very easy residentially for us to get mechanics lien waivers, for us to submit AAA draws, deal with the bank, make sure we have all the backup data in our submissions to you, like every receipt that we've ever done, just because our systems are in place to account for that. So it's like bringing big scale mentality and big company mentality on a smaller level.
So let's dive in a little bit on the systems front. What type of systems are important? We work every day to more and more introduce more systems to our business. What are you currently leveraging, and what have you been able to leverage from a multifamily industrial down to a luxury residential?
Yeah, so I mean, I'm not sponsored by these people at all, but if I was starting a a small scale company or large scale company, I would get involved with a company called Adaptive. Huge. Basically, they're an ERP system, so they're replacing or trying to replace QuickBooks essentially, but for contractors. And the important thing that they're doing, this is probably the biggest system that we're utilizing right now.
Okay.
They're able to do all of your AP, to your accounts payable, all of your ARs, all your accounts receivable from your clients, and on this end, they're able to do all your credit card tracking. They're able to submit, in an AIA format or a non-AIA format, depending on who your client is. They're able to provide all the backup data for all the receipts and all the invoices you're getting. It's all in one system. It's huge. Like basically, I was able to take my back office from 5 people down to me. It's an email address, and that helps me scale. It helps me earn higher margins, more profit, things like that. But Adaptive is huge. We were kind of doing a makeshift version of it where we're using Bill.com, which is certainly good. It's definitely got a place. We're still using it up north. We're using Expensify. We're using Co-Construct, and then we were manually doing lien waivers, W-9s, insurance checks, and stuff like that. This system does all of that, and it's the same cost as probably one of those systems. So if I was making a move or starting out or trying to increase what I'm doing or increase my profit margins or whatever, I would take a look at the Adaptive for sure.
Just do your 1099?
Yeah, I mean it's not yet. I still have somebody kind of doing that. That's why we still actually have QuickBooks or QBO for handling a lot of it. But their main goal, they're still so new. They're owned by a private equity firm, but their main goal is to replace QuickBooks because QuickBooks is built for everything, right? It's built for everybody, all businesses. And where they lack, people have been supplementing with other types of, systems, right? This is basically solved it all. And now they're building out the ERP end. So I bet you within the next 6 months, they're going to have all this stuff and it's going to really help contractors.
Wow.
So Sean, you're a builder, you're a developer, you got, $250,000. You're going to go enter Delaware. Give our audience a little bit of the techniques. I think you did some really cool things, but they're really inexpensive and kind of guerrilla tactics when you're entering a market that helped you stand up, kind of Grit Coastal. How would you direct somebody who wants to start flipping or building homes in a new market?
Yeah, I mean, so knowing the market is kind of the first thing, right? For me, like I had familiarity of the area, right? I wasn't just entering something I had no knowledge of. But I had no knowledge of the building aspects of it. Like I had never pulled a permit down here. I'd never built anything down here. So, but know the market. Like, I knew what was important. I knew, who the key players are. So if you're entering a market, I wouldn't enter that market unless you see some of these things, right? Like, so what we looked for was, I saw NV, I saw, New Orleans, I saw DR Horton, I saw Insight, Shell Brothers, I saw these guys building track homes 10 minutes from where I wanted to be, right? The interesting thing about Delaware is it has some competitive advantages over a lot of the beach markets. So some of the things we looked at were, hey, Delaware's tax structure not for businesses, but for homeowners, like you can be bayfront and beachfront, pay $1,200 a year for taxes. That's insane, right? You look at like Jersey, you're $25,000, $30,000 for a beach house. You're $12, $15 million. If you're trying to be in Stone Harbor, Avalon, and be like, one of the better houses here, you could be beachfront, bayfront for a fraction of that. And the beach and bay towns are incredible, right? Like, so we tracked a lot of that. When we came into the market, we said, hey, Sussex County, which is where Rehoboth and all those are, it's one of the fastest growing counties in the East Coast. And they have 7% population growth year over year. So there's certain things I was looking at. But yeah, I mean, if I had $250,000, I was heading into this. First, make sure the economics are going to work, right? Like there's a lot of things going for me in Delaware. There's a lot of things going for a lot of people in Delaware. But make sure it's a city or a territory that's on the up. Right. The next thing is, find a deal. And at first, I'd mentioned this previously, but, I was kind of a price taker, right? I didn't have a competitive advantage against everybody else, but I used the one thing to my advantage when I built Grit Construction was I paid people quickly. So once I paid them, I was able to then start decreasing my cost on future deals. So the first one wasn't a winner for me, but it kind of set the tone for the future projects, right? Start small, earn respect, and then scale the company.
Love that. So in summary, guys, know your market. So he gave you a couple really key insights, right? Population growth, favorable tax structure, depth of the building market, and particularly the public's building, a lower end product. Saw an opportunity, knew his margins, and then was a price taker on deal one, was willing to not make a lot of money or break even to learn the system and then set himself apart from the competition. Is that a fair summary, Sean?
Yeah. I mean, look who's coming into the market too. Just not the builders, right? Like commercially, Starbucks is building 3 Starbucks on Route 1. Yeah. Like, follow them, right? They know more about market research and market data of who's going to be and who should be than I'll ever know, right? Starbucks, Chick-fil-A, they're building the Whole Foods now, and this is more inland. Follow that, follow the action. Go, okay, the Whole Foods, they want 150,000 eyes on their place a day or whatever their statistic is, right? So if you build it, they'll come. So they know that it's coming. Start following that and building a couple blocks away. We're still building Bay and Beachfront, but that's just because that's my focus. But the Whole Foods is 10 minutes away. So, and Starbucks is 3 blocks away. So, some of these economics make sense when you start looking at it from the commercial tenants as well, not just like the other builders.
Love it. JD?
Sean, talk about how you manage sort of the capital side of your business. You said, making, a big thing is if you were entering a new market or starting, is to make sure the economics work. So maybe like we could talk about, obviously you have a background in finance. So for somebody that doesn't maybe have as strong of a financial background, like what sort of recommendations would you give them about how to learn sort of about the back end capital side of the business?
I mean, first of all, it's networking. Obviously I'm friendly with you guys, but you guys teach me a ton of stuff, right? So, anytime I'm trying to figure something out, I call Ryan, or I call you guys over there and, you'll tell me what's up. Like your market update's great. I was listening to that. That's helpful, but being up on that stuff is just helpful, right? Like you should know if interest rates are going to affect your business. Down in Delaware, they don't affect me, right? It affects me if I need capital to build these, but my buyers are the end user, right? They don't care what the interest rate is. So I'm less affected than I was up north. Interest rates are very heavily affecting people in Philadelphia and developers, right? Investors are heavily weighing those options where the end user, like a client in Delaware that's building a beachfront house, he could care less what interest rate it is. But understanding all this stuff, going on different forums and learning, capital structures, seeing what money's going to cost, seeing who you can borrow from, but building out a good network is really kind of where I would start. I have this background because I've been doing it so long, but I think you got to make your first step, make your first mistake if you're early on, because it's not going to be as costly as just sitting on the sidelines.
Love that.
Sean, I know now you're building for a lot of the actual homeowners, but when you are working with an investor, a lot of the folks on this call and attendees are investors that are working, need to work with Grit Construction or Grit Coastal. And so what is some of the things you look for in a good investor?
If I'm working with somebody, just like I pay my subs, right? I pay my subs quickly. On the other end, I want to be paid quickly, right? And I'm more apt to then give you better cost breaks on my construction. Just people that are just nice to work with, right? Like sometimes when I'm doing the contract negotiations, it feels like it's one-sided, but then there's some people I deal with that are like, hey, it's cost plus, let's build this as a team. We're working together. Look at your contract types, look at the people you're working for or with, right? So if I'm on the investor side of it, and I'm trying to hire a contractor, like I'm doing the reverse role here, I want somebody that's aligned with my interests. And I want someone that, they're going to take on a cost plus contract with me and they're going to give me all open book data. Like that's just what I want to see. I want to see what you're paying. I want to see what you're making. Transparency is huge in this business. And that's kind of where we made the shift to Delaware, is that everything I'm doing is cost plus, and it doesn't, some people think cost plus is kind of a negative term, like, oh, they're just going to drive up my cost. I think it's the furthest thing from it, right? If I'm paying somebody huge dollars on this deal, how am I ever going to make another deal work if every deal I'm then paying huge? The economics don't work there. So I'm working with them and driving those costs down. I say some of the projects I've done up north, I just did one in like Drexel University for somebody, and it's cost plus. It was a fixed fee. We're working together. It's probably the cheapest job I've built from a, what we thought the contract was going to be and what came back to them. We probably gave them $300,000 back in their contingency that we told them to hold. So I think you want to have a partner as your contractor. You want to have a partner as your investor. So
on the partnership piece, talk about the importance of the operating agreement. And
yeah,
I know you may have some stories about it, but yeah, why is the operating agreement so important? We always talk about this from an underwriting perspective. So shine a little light for us.
Yeah. So, I mean, when I first started out in the business, I thought the operating agreement was just something that got me over the table to get the deal financed. And I don't think I ever read the documents, which is kind of a piss poor way to look at it. Right. But everything's great until it's not, right? And then you start digging into these things. Like everything's great with your contractor until you guys have a dispute on a bill. Everything's great with your partnership until you guys have a dispute. Then everybody starts digging through their documents to see how they can, quote unquote, unscrew themselves. So look at that now. Look at it today. As far as an operating agreement perspective, people have different goals, right? I partner with people that are younger than me. So some of my employees that used to work for me I let them partner with me, right? Their goals are far different than mine are now, right? They might want to refinance a deal and keep it forever. I might want to sell it so I can go buy another deal or buy a beach house, and some of my partners are older and they have different goals, and holding a building in perpetuity for them is not something of interest, but we're buying in a qualified opportunity zone. So we have to. So you want to make sure you're aligned with your partners. And if you're not aligned, you want to make sure that the paperwork behind it's aligned. And then also like how things, like if you do have a dispute, how like the resolution of it happens. Like if I need to be bought out, how's the valuation piece look? There's always a valuation component of it, which says, hey, if I'm getting bought out, do we just make a guess at what the the market value of this is, and we take 90% of it, and I chop it up and I get my third? Or is there, hey, we bring in 3 independent appraisers, we all agree that it's the average of those 3, and then we pay out 95% of that, or we pay out 100% of that, minus debt and stuff like that. I've run into some scenarios where I'm trying to get out of things with partners, not from a bad situation or anything, but we've moved past it and didn't realize that my operating agreement said, like, we take the lowest of the appraisers and you get 90% of that. And I'm the one trying to leave, right? So now I'm like, hey, I'm actually going to be your partner for longer, guys. Sorry. So.
While we're on this, I guess it's a bit of a boring topic, but I know it's a lesson you've learned over the course of time is the insurance component of it. Sean, maybe touch a little bit on the insurance side of the house. It's largely overlooked in the industry, but it can be detrimental. And then we'll get into some building science.
Yeah, I mean, so on the insurance piece, I think everyone just thinks I got to have insurance, got to have builder's risk, got to have some general liability, and I think everything's hunky dory. But look at the asset class that you're building, right? If you're building single family houses, or you're going to move and make a shift to single family house, or even tract homes, right? You can be building tract homes anywhere. Once you start building more than 3, if something is an issue, like you have a roof leak or you have something that failed in the building systems, that's no longer a small claim. That's a class action lawsuit if you get all 3 of those people in. And you want to make sure whatever you're doing is you have the correct insurance. So at first we were shopping insurance and looking for the lowest rates, and didn't realize like a lot of these policies have carve outs in the back end that exclude residential. And residential is this term like, oh, well, I'm not building single family houses. Well, that's not the truth, right? If you're building a condo building that has 12 units, you're building residential. And I didn't realize that. And condo units, when you have 1 failure, you have 12 failures, right? Now, we haven't been sued for any building defects or failures or anything like that, but I'm seeing other people with this, and I'm learning through their, issues that I had to up my insurance, right? So I upped my insurance. I got the right brokers. And again, it comes back to having the right banking connections, got to have the right insurance connections, and not people just rate shopping and price shopping insurance. Like, make sure you're covered what you're doing, not what you think you're doing.
So I think just one more point I want you to elaborate. At one point you were bringing engineers out when you were building some of your bigger buildings just to validate some of the architectural designs that allowed you to actually come back when there was a defect, I believe, Sean, and say, I built this correctly, and now you actually have to pay me to fix this, even though I built it correctly, right? So maybe walk them through that.
No, that's great. Yeah, I appreciate that. So yeah, I mean, we hire construction managers or hire project managers, right? They know a lot. They don't know everything, right? They're not the one that designed the building. They're working from my standards and things that I'm expecting, right? But the engineer, the architect, the consultants, they're the ones that design this structure, and they know it better, or should know it better than anybody. So in our process, what we've developed was, instead of relying on my people to make sure that the building was 100% framed correctly, like we're making sure it's done by the framer, we're checking it, we're doing our checklist internally. But when we're done, we're bringing out the engineer who designed the building, and we're saying, go ahead, do a thorough review of this, take pictures, make a report, tell us everything that's deficient, or tell us everything that's great that we did. Write up that report and send it to us. And when something goes wrong, if it goes wrong in the future, we could say, hey, like, we had the engineer out. If you're saying there's a structural deficiency, well, it's not just Grit Construction you're looking at. You're starting to look at everybody. And we're kind of spreading our risk and, deleveraging our risk through people that are, more experienced than we are in knowing these building systems. So yeah, absolutely. And same thing with mechanical systems. Like, you bring out the mechanical engineer, bring out the person that designed the mechanical system, the electrical system, the plumbing system, have them review it. It's small price to pay on a general contractor level, or even an owner level, to have these people come out and review these things ahead of time. So
incredible risk management technique for everybody on this call.
Yeah, I thought that was incredible when we had our prep call here with you, Sean. Was that was one of the things I took away, and especially as an investor, if you're a remote investor, you're living in New York or the Carolinas, and you're doing a project that you might not be able to get out to, and you're relying on a general contractor, really getting those reports, getting that third party verification could help out, save a ton of headaches down the road. I thought that was great.
I think it could also help you too. Like, if you're determining, hey, we're kind of having a dispute. I don't know if they're billing like the correct amount from a GC. If you're the investor or you're the developer, hey, did they bill the right amount? Am I getting what I paid for? Pay an engineer $1,000, right? Have him go out and tell you he's the guy that designed this building. And I may not like it, but to be honest, personally, I love when people want to bring in the engineer, bring in people smarter than me and my team, and tell us what we did or didn't do right. Because again, it's good protection for me, but it's great protection for the investor, right? At the end of the day, they could say, yep, Sean's billing for framing. He's saying he's 100% complete. It looks like it's complete, especially, if you're remote, like you were just saying, in New York, California, we build for people that have never even seen the building. Sometimes we got a guy in Puerto Rico right now. I'm sending him pictures. It's crazy, but that's a relationship I have. But, we do the right thing. We have integrity, but having a little peace of mind, he could hire the engineer or the MEP engineer or whatever, bring him out and get a report. So
So Sean, on the building material front, take us through as you've moving from a little bit higher multifamily industrial now into the luxury homes. What are some of the insights or any materials, anything specific that you'd point to that you've been able to take to make your products a little bit stronger? Yeah.
I mean, so if you're building in a coastal environment or a coastal town, salt air is unforgiving. It doesn't care what your budget is. And it's wild. Like, when I came down here, we put up light fixtures that we would put up in any building, and in a year they're completely rusted. You start forgetting how I'd say horrific a marine environment is. Like, right? You got hurricanes, you have constant rain, you have salt air, you have corrosive things that, nails. Like, we're using stainless steel nails, like 316 gauge stainless steel nails, right? It's super expensive to do, but it's something you don't think about when you're building up north. When you think about just like materiality, right? Like, our foundation systems are completely different. We're driving pilings, wood pilings, steel pilings, helical piles, 20, 30 feet into the ground, just to prevent, uplift. You got FEMA regulations you're working with. Things have to be built above them. They be built to FEMA standards, but they got to be, above the floodplain. And the more these nor'easterns start hitting, you see a lot. Climate change is real, right? Like, so the weather's coming, and the better we can do in building for this environment is it's kind of on us, right? So our waterproofing standards have increased substantially. Like, we were doing great stuff up north. I thought we were probably at the forefront of building science and weather barriers up there. Down here, we're still like we're going above and beyond that, which I thought was crazy. Now we're doing liquid applied waterproofing. We're doing a belt suspenders approach with zip products, and then putting another membrane on top of that has some type of rain screen, which hopefully I'm not losing everybody here, but there's just so many things that we're doing that we never thought about just because we're on the coast. Like I said, again, the salt air is so unforgiving. It doesn't care about our budget.
So if you were so just to elaborate on that, I think a little bit more. So if you're coastal, you're going above and beyond. Maybe, Sean, what were some of the 5 or 6 main either weatherproofing techniques or techniques in general around building that you used in an infill environment that you thought put out a better product and preserved the building itself? That you would
so up north, right? If we're not just talking coastal, we're talking about all projects. Like, I think everybody should be used. If you have an investment that's over $1 million, which is most buildings that you're building, unless you're building like a single family house, you're building 2 houses, right? 400 or 500 grand, you're already $1 million, right? So I think you should be putting on like peel and stick, WRB, so a weather resistant barrier. I think it should be a peel and stick product. Or it should be all zip. If you're still using mechanically fastened Tyvek, I just think you need to get up with the times, especially if you're trying to mitigate your liability. We just talked about all this liability stuff, and then you're trying to save $2,000 by not putting on a better barrier. I mean, that's crazy. Sometimes we would cut into our own margins just to build things with higher performance. So peel and stick membranes being one. As far as the framing's concerned, a lot of is more strapping, more stuff that's going to protect against uplift and wind loads. Like, we build at the coast for 135, 145 mile per hour winds. PA is rated for 105, right? But we're still building in Pennsylvania, like we're building 135, 145 mile per hour winds with how we're doing like our sheathing, our strapping, our hold downs, our shear walls, things like that. We just kind of carry it from one to the other, and we don't look at it as different markets build differently. We look at it, set a standard, build that way, and keep building that way.
Love it.
So, Sean, with your experience at NVR when you were there, you've clearly done some big projects that we've seen in Philadelphia. One of the areas that is always troubling for us, and we think that investors need to spend more and more time on, is the planning and execution side of how to, you never see NVR go into a development and build every single house at the same time. And so what are some of the best practices, or what have you learned over the years to help out with the planning of a project?
I mean, one is spend more money on it, right? People want to they want to get as quickly to a permit as possible. Like a beeline to the permit so you can get vertical and start making money. But what they don't realize is doing that and cutting out, not getting the correct, not having plans reviewed by a contractor, right, to see if the costs are in line. Not having the engineer re-review the plan change that you made last minute, right? Half the time we're making a plan change at the permit level as we submit that never gets re-evaluated by the engineer, never gets re-evaluated by the mechanical engineering team who's designing the plumbing systems in these buildings. And then they're coming to me. I have a plan set that's kind of hodgepodged. It's got good permit set, decent structural set that wasn't the collaboration wasn't there. And then the mechanical and electrical and plumbing plans were just like an afterthought. And then we're going in and going, hey guys, like it's actually going to be $50,000 more because these things don't line up. This is not the right thing. And had they paid another $2,000 for the MEP engineer to re-review it, they would have saved $50,000, right? It's don't rush, get it right. So like we're building single families now on the bay and the beach. I'm paying for mechanical plans here. No one does that. But I want to hold people accountable. I want to build the right building. I want to know what I'm building. So we're spending a lot of time up front on design, engineering, mechanical layouts, so I can save time building and with the construction costs. So yeah, I mean, I wouldn't rush into it. I see so many people doing that. I think that is a huge downfall of a lot of things that we were building up north. Is it was kind of an afterthought. It was rush, get a permit, hire a builder, get it out of the ground, and then argue about change orders.
Anything else, boys?
No, it's just been, I mean, Sean, this has been incredible. It's been incredible to see the journey, the transition from our perspective, as we've built a relationship with you over the years and excited for the success that you're doing down there.
Come to Jersey so you can build beach houses in Jersey. Bry's got one coming up.
Yeah, no, I'd love to. I think it's like an old boys club there, so I don't know if I'm welcome. Delaware's very welcome.
You're
so
always welcome.
If people are looking to build, me come down here. We could always use more people.
Yeah, that's a good way to end. Where can they find you, Sean? How can they find you online?
I run my Instagram account now, so if you're looking me up on Gritty Sean or you're looking me up on Grit Coastal or Grit Construction, I think it's almost synonymous. I'm one and the same, so I'll answer any questions you guys have. You could call me. You could find my cell phone on gritcoastal.com. I'm not going to give it here, but yeah, I'm happy to talk construction any day of the week. I love it. I could spend hours talking about building systems and how things come together. I could talk about financing stuff. I could talk about how I got started, but I love when young people are getting involved in this and putting a foot forward. And I love the people that work for me that if they're buying buildings, they're buying deals, they're doing stuff, they're growing. I think it's awesome. Everybody that's worked for me, I think at one point has bought a building and is now some type of landlord. And I feel somewhat responsible for that. And I love that. So.
Yeah, I think the one soundbite, if you really listen to what Sean says, he thinks like a CEO and operator, right? So everything he does is got purpose, it's got integrity, it's well thought out, and he's not just trying to rush and put something in the ground. He's actually thinking about what he's building. I think that's one of the things our investors could surely, take some time. It's gonna, because otherwise you're gonna pay the price, right? At some point you're gonna pay the piper, right? It may not be the first deal, second deal, third deal, but at some point you're gonna give back that money because you made a mistake because you didn't slow down to speed up. Sean, we do have a bunch of questions here that people want to ask you.
Yeah, cool. Right on. I'll try my best.
Yeah. What's one piece of advice you'd give newer builders that would save them time, money, or stress?
From a building aspect, patience, right? I'm still learning it, right? Craftsmanship for me is the brand now. Where making money used to be the brand, and it's morphed into craftsmanship's the brand. You gotta earn trust. It's one detail at a time. But in Philadelphia, the market was huge relative to where I'm at now, right? So it's still a small market, but it was much more forgiving. If I did something wrong or made a mistake, I had another shot. But when you're building in a coastal environment or you're building for an end user $3, $5, $6 million house, you get one shot, and if you don't land, it could be the end of it. So focus and spend time, be patient.
Goes back to the CEO mentality. I love it. What signals to you that a builder is bankable, and how does a builder like Grit meet or exceed that?
Check their references. I mean, as far as a builder being bankable, I guess you could pull their. People would ask me for my financials all the time, and I was happy to provide them. But talk to the subs, right? The subs will tell you right away if people are struggling. We know firsthand who can't pay their bills because they're coming to us because I'm basically their bankroll every Friday. I'm the one paying them, and I'm like, why not the other guy? But yeah, I mean, check around. If you're the investor, you're the developer. Look at the subs. Ask them, does this guy pay you quick? Is it an argument? Is he always short paying you? Is it always I got to wait for this? Yeah, I mean. That's the best way. And if you're finding out they're bankable, I mean, you can check their financials, but you can fudge that a little bit. I would put it as, part of the bank has to check their financials and see if they're bankable and see if they're bondable too, right? If you're bondable, your insurer had to have ran it by some underwriting procedure to see. And if you're a bondable company, it means you have cash flow coming in. It means you have net worth, you have assets. So,
Sean, I got a personal question for you. I know next to nothing about construction, and my girlfriend's father is a stonemason. So where can I go to learn about some of this construction stuff like Zip and Tyvek so that I can make myself a more suitable partner?
Yeah, right on. I spent a lot of time in forums online talking about stuff, but the guys, Matt Reisinger, Jake Bruton, Wade, all these guys from the Build Show. So Build Show Live, buildshow.com. They are at the forefront of everything building, everything construction related. They've seen every building failure in the world. They've seen them all done right. They've done successfully, done unsuccessfully. And they hit on all those topics. So you can just pick and choose, but they have like a huge database of videos you can watch. But those are the guys, man. I'm a fanboy of all of them. And, I was able to go see them in Texas a couple of weeks ago, meet all of them. And I just was in all of the knowledge that they have. So, and I thought I knew a lot, but was I humbled.
It's incredible, guys. That's a growth mindset too. It's another way to take away, right? Always learning. This is a guy at the top of the food chain and what he does, entering a new market, competing with the big boys, and is still, excited about the growth and the learning. So if you're going to be in the business, you're going to be passionate about whatever it is you're doing, make sure you got that growth mindset. Coach Rye here, sorry. All right, Sean. Well, this is awesome. We appreciate it. Hopefully the community that's watching really appreciate it and took some good nuggets away. We'll be back next month. We're not going to tell you. It's a surprise. It could be a guest. Could be a wrap-up for the year. Could be Brian JD going off on macroeconomics. Either way, we'll be back in December. We wish everybody a happy Thanksgiving on behalf of the Capital Market Boys and Grit Coastal and Grit Construction. Thank you.
Thank
Thanks,
you.
guys.
Thank you.